Hello everyone. My name is Pranshu Kedia, one of the interns at Sarthy Ventures. I feel very excited today to host a webinar to get insights about all the motherhood questions one early startup may have during his journey. And so to answer these questions, we have a co-founder, Mr. Girish Batra, with us to help us through and answer all the valuable questions. Hi, sir. How are you?
I'm good, Priyanshu. Thanks for having me on this session.
So let's don't waste any time and let's begin with our first question. So this is a very common question for all the startup. So should startup focus more on generating revenue, having more of a positive cash flow, or going towards more of valuation game, aiming to become a unicorn?
So what I may answer may not be what the industry practices, but I think being a unicorn is a big distraction, which is taking away a lot of energy and giving a lot of money to folks who don't know what to do with that money. So I read a nice script on LinkedIn, which said that if I have one bucket of water, I'll wash my car with one bucket of water. If I have 5 buckets of water, I'll wash my car with 5 buckets of water. If I have 20 buckets of water, I wash my car with 20 buckets of water. So what happens? The same car is getting washed. In one case, one bucket of water is being used. In another case, 20 buckets of water is being used. The same could have been achieved by one bucket of water. So I believe giving a lot of money to founders and putting a tag of unicorn is actually making life tough for them. And I'll give the example of Abhinandan Bindra. I hope I've used his name right. So Grofers, I'll just cut short the story, but people can check it out. Like SoftBank was looking for a startup to fund in the uh, grocery space, but they had a model in mind in which they said, you don't create godowns, you don't create infrastructure, you use the infrastructure of nearby grocery stores and deliver to the customer. And Big Basket, Mr. Hari Menon refused this idea, but Abinder jumped on it and he kind of took the funding and he built that business. Didn't succeed. Pivoted to a similar to Big Basket model, where he created huge warehouses and he was delivering customers from those warehouses. Didn't succeed. Then in 2021, the fast commerce idea was born. Just imagine, as a founder, you tried one startup, failed, tried another startup under the same name, failed. Grofers pivoted to Blinkit. And again, they got funding from Zomato. Again, it was a third. Mr. Abhinandan has done 3 startups in the last 6-7 years of the life cycle. And you can see his portrait. Just Google Abhinav Bindra and you can see his portrait, the stress and the pain, because burning money is also not fun. So if as an investor, if I give you $800 million at a 3 million valuation and you burn it in 2 years, 3 years, do you think that you get any joy out of burning money? Nobody gets joy out of burning money. When you use money and after using that money for building a business, you realize that it's all gone waste. The pain and the stress it creates in you is very bad. So I believe that startup founders should build unicorns whose definition is $1 billion of top line, not $1 billion of valuation. The day a founder changes his focus from $1 billion valuation to $1 billion top line, that day, that is the real unicorn for me. And I'm going to see that coming in the future. The definition of unicorn will change. Suddenly you are out of the valuation game and you are in the sustainable business building game. So that's what people should be fighting for, working for, burning midnight oil for. Building a sustainable business which has a top line of 8,000 crores or $1 billion.
That's you have put your point beautifully. That's how the market is also reacting. As we can see in the recent times, the listed new age businesses have been badly punished by the investors for the cash burn as well. So nowadays, the new investors and with the upcoming uptrend in the interest cycle as well, there's more focus on building efficiency rather than more on cash work. And one more point that was beautifully put by you, that yes, having a unicorn tag to a particular startup puts a lot more pressure and a lot of ambition as well. Now people and all over in above in the industry have a lot of faith and there's a lot of pressure upon the founders as well. So that was also very well put. So let's moving on to our next question. So in your opinion, how much of a share should a founder of a startup should be willing to give to its investors? Because as we can see, like as always, investors say that they should also have some skin in the game to have some interest and strategy towards a startup. So how to strike a good balance in getting the fund raised as well and having the equity within themselves as well.
See, there are investors who want a larger chunk of equity, and that's why they prefer to come early stage. But I believe dilution is the slower a dilution is, the win-win for everyone, because no investor will take responsibility for the success of the startup. That is with the founders only. Investors are quasi active or inactive players in that success journey of the startup. Yeah. Of course, they may give a few referrals. Their name may add value to the business that, okay, XYZ investor has come into this startup. But beyond the point, the success of the startups is with the founding and the senior team in that startup. And at times, investors become a distraction. I gave you the Grofers example that investors wanted a particular business, someone did it, but it failed. And the investor didn't come forward and say that I made him do that business and that's why it failed. The founder failed. Yeah? So equity dilution should be done after thinking of all the pros and cons of the dilution of which investors coming on board, but with that responsibility that the success of the business is with me as the founder versus the investor. Yeah? The investor will be a catalyst or an enabler to some extent, but the main success formula has to be with the founder. So the investor is only providing growth capital. If I'm going at a speed of 60, the growth capital will help me grow at a speed of 80. Yeah, that's the only change which capital will bring in my journey.
Okay, that's great to hear. So if we just summarize that, like the investor should put more focus on building the business, and it may grow slower. And if he or she believes that she has a good model in his hand, should wait on giving of the more of dilution and grow at a steady space. And once he feel that he cannot grow at a after a certain beyond of time, he should more look to dilute its stake after that. Is that right?
True.
So let's just ask one more question. This is very important in terms of this time. Like as we know, we are in a phase of great resignation all over the India. So in new age companies, in new startup companies, it is very difficult to attract and retain good resources which can help the company to grow. So how you can tackle this problem rather by giving them high salaries or giving them a small stake in the startup itself, but that again leads to some kind of a dilution in the co-founder's stake. So how would you address this problem as a co-founder's point of view?
So I believe there are a good number of talented folks working in big corporations who are looking at adding value in a startup because of the scope they get to add value to. So, in fact, I believe that the talent curve has shifted towards startups versus the big MNCs and corporates. Even today, or especially in the next 3 years, there'll be the day zero, the day one talent would be with startups versus the MNCs and the big corporates, because it's so exciting to work in a right stage startup. They pay better salaries, they have lenient ESOPs, yeah, and in fact, startups are the ones who are causing this great resignation. If you go through the history of the last 2 years, the salaries in tech companies have actually more than doubled in less than 2 years because of the startup absorption of talent. So, and it's a good, as a IT resource, I think it's a really great time to add value to either your corporate or a startup. And I know of folks even doing moonlighting, working on weekends for startups and working on 5 days a week for their test job, trying to put legs in both the boats. But a talent war is always good for the economy. It pushes up salaries and everybody wins. The talent also wins, the corporates also win. The good news is India has lots of talent. So we are a big country, so we will never be having a dearth of talent, to be frank. So there's good amount of talent available for both startups and corporates to put their hands in and build value along with the employees. Now, regarding ESOPs, see, ESOPs is a good tool to hold back employees in the long term in the startup. And if it's rightly implemented, it is win-win for everyone, win-win for shareholders, win-win for the original founders, and win-win for the key resource, key management personnel who's getting the ESOPs. And they've been rightly deployed in the startup ecosystem without disturbing the overall equity. So a founder has good enough equity to satisfy investors and employees in creating a ESOP pool. There's good amount of wealth to be created for everyone, as I see it.
That's very correctly pointed out. Like we can see the early newcomers or the dropouts are looking more to work in startups to have a more of a overall experience gain as with time, because that gives them a lets them to build their career also in many things rather than just doing a particular job at a MNC or a big company. So that has also helped startups to attract resources. So just I would like to give a thanks to you a lot, and this is a very good feedback for all the early age startup, as correctly pointed by you, that once the founder should focus more on building their product and more focus upon building their business over a period of time, and as the businesses grow, all good things will be at their doorstep as well. Thank you so much for your time.
Thanks, Priyanshu. Thanks. Really enjoyed this conversation. Best of luck and God bless you. Bye.
Thank you.